Good morning. It is Monday. It is 6:30. It's 8:31 AM EST, 6:30 my time. So we are here, and we're going to go ahead and do a bunch of market things. The market open in New York is in an hour or so. So this is kind of as we do pretty much every day, a pre-market look. We take a look around at what might happen at the market open, and we have people come on and ask questions. And we got Think Free here, who may actually be kind of coming back in a moment.
Yep.
Are you here?
Yep.
Did you get your coffee?
You bet.
All right. That's the only way to fly.
I know.
So yeah, we're here. V the Gorilla might show up. I know he was, let me see here. Yeah, he might actually show up. He's usually on the phone overseas at this time because all the people he works with overseas are kind of ending their day. So they talk to him. But usually he'll come on and join us here. So now what we're doing with Think Free is that, first of all, Think Free, you'll notice that not right now, but in about 28 minutes over in Telegram, I'm going to go ahead and open it up in there, right? So you wouldn't be able to see it right now. But when we go to the private lab after this show continues. It doesn't stop. And then over in Telegram, you'll be able to open up this show in Telegram and join us live. So that happens like 5 days a week. And it actually, I'm starting to learn just how many people don't even know how to do that. So that's something that I need to kind of remedy there. Now, we do have a handful of people watching on X, watching on YouTube, all that stuff. So go ahead and leave a comment. If you have a chart you want to see, ask for it. And we're going to take a few moments here and just take a look at what's happening during the week. And then we're going to jump in and take a look at Think Free's fledgling algo. He has something that he was kind of working on. And Think Free, you were going to come on, I think, like last week. And then we just kind of did a pre-show just to see where you were at. And it seems as if you were not quite ready. So we reviewed what you had. And then we just kind of figured out what we needed to do to get you ready for the show. And that being the case, it sounds to me like you stumbled upon something. Did you say?
Yeah,
you stumbled upon an algo?
I really think I did, but we'll get some reality check from you and proceed with it. Yeah.
Perfect. Now let me see if I can turn your mic up a little bit. It is hard to hear from you. I hear you. I can say something.
Is that better?
That's a bit better. Yeah, I'm also
okay. I'll try and speak up.
You could definitely do that. Let me see if I can help that out too. I can adjust your volume a tad here through the software. So I'm just going to do, before we get too far, we're going to take a look at the calendar here because we do want to let everybody see what's happening. Today we have some manufacturing data come out. Let me share the screen so everybody can see. I don't know how many times I've come on, hey, we got this and that, and look at the chart, and like I haven't shared the screen. I feel so bummed out when I do that. But on the screen here, let me manipulate this, and that way you can see it. And let's make a few changes here. Okay, so today at 8 EST, I'm sorry, 8 a.m., so 10 EST, we have some manufacturing data come out for the USD. So that may or may not, if this data is really kind of surprisingly far away from what is expected, we might see some significant movement in the market. Any of these red envelopes are going to be that way, like this at 8:30 EST for the Aussie dollar. They're basically their version of the FOMC minutes. You've got the Euro CPI coming through for Germany. That's they don't really have a time for that on Tuesday. So sometime like nighttime in America in the wee hours. We have job openings on Tuesday morning. So each day at about 10 a.m., Monday, Tuesday, and Wednesday, we all have some kind of data coming out. So that could add some volatility to the market. And it's going to make it so that the trading day is, look, if I were in a swing trade, I wouldn't worry too much about it. Usually the stop loss on a swing trade is far enough away from the price to where I'm not too worried about it. If I were day trading, I would probably tighten up stops or exit the trade prior to this data coming out, this ISM services or anything like it, because this can affect your trade, right? Non-farm employment change, again, that's going to be this time at 8:15 AM EST, right before the beginning of this show. Usually I'm not in trades, not any day trades at that time. I might be in a swing trade. But again, if I were in a day trade, any of these events, I'd be real careful with my stops. Swiss CPI Thursday for them in the middle of the day, for the US in the middle of the night there, right after midnight in my time. We got unemployment claims the next day at 8:30 EST. So we just got to pay attention here. Some more data coming out every single day this week. Most days somewhere between say an hour before the market open to maybe an hour and a half after the open. Just got to watch out for that data on trades. So it might be a good week for either swing trading, which is, don't worry. I don't worry too much about what's going on. I might tighten my stops. I might adjust my positions, but if I were day trading, I'd be definitely careful with what's going on around those events. So that's over at Forex Factory if you want to review that for yourself, right? So what we're going to do now is we're going to hop over to take a look at ThinkFree's algo. ThinkFree, do you remember how you sent me that link before from TradingView?
You put a link in for me.
So what you're going to do is if you take a look at the
go back to that.
Okay, let me zoom in on this. I'm going to show you what to do. Now, everybody just sit tight with this for a minute. Now, you're going to pretend you're looking at your screen right now. Let me just get rid of this gobbledygook. Okay. So, and here it is, by the way, while we're talking about that Bitcoin doing what I thought it would do right now, just arranging in this area. So that's pretty much it. I took a little scalpy yesterday on Sunday. I was calling this little move up that you see here. Let me remove this bit here. This move up, I called and traded it yesterday. So I just kind of scalped it, which I usually don't talk about my scalps with the group, but I did tell the private group that I thought it was going to go to this level, and certainly it did. Now, ThinkFree, go to the top right of whatever the name of your. In fact, let's do this. Do you know how to present screen? You see it at the bottom there.
Yeah.
On our software, you see where it says present.
Yep.
Okay, go ahead and click on that, and then share your screen.
It's video file or share screen.
No, you're gonna go to share screen on the bottom.
Yeah, and then
you're gonna choose where your chart is. Make sure there's no personal info on there.
Yeah, no, I got it.
Yeah, just go ahead and share that screen, and I'll direct you what to do. Okay, you're gonna have to. Okay, I have to add it. Go ahead and maximize that. Okay, you got a wide screen here. Interesting. Okay, on the top right, you're going to see the name of your chart. It looks like it's March something or other.
Yeah.
Click on that. Drop down arrow. There you go.
Down to.
And then you see where it says sharing. Go ahead and toggle sharing, please.
Yep.
Toggle that. Yeah, toggle that. And then hit the copy link. Just below that, it's in blue. Go back up to sharing. Go back. There you go. Right below it. Yep. Copy that. Go ahead and paste that link over in Telegram.
Got it.
In our private private group, right where I sent the link for this show.
Yep. Paste.
There it is. Okay, perfect. So I'm going to go ahead and open up what you're seeing, everybody, is how you can share a chart basically with people, right? How you can share your own, whatever you're creating, your template, your algo, if it's an algo, which everything is an algo. So now I've brought up ThinkFree's whatever he's doing on here. Okay, so you decided to stick with Elder and ADX after all?
Yeah. Yeah, I think the new idea I had integrated the SMI and the ADX DI lines, not the ADX line.
Oh, so not the actual ADX line, but the blue with the green and the red?
Yeah.
Okay. All right, so what you're going to want to do, just to make your life simpler, is now what we have on the screen, you haven't seen it yet because I haven't shared it, but let's go ahead and share the screen. Okay, what you're looking at is ThinkFree's fledgling algo here. So I've got a triple screen here, right?
Yep.
And looks like you've already done it on the left. You can get rid of are you using the ADX and DI on all three screens?
Well, no, really only on the 1 hour and the 4 hour.
So not on the 18 hour.
Yeah.
So we're going to delete it off the 18 hour. On the 4 hour, I'm going to get rid of the ADX because you're not using it. Okay. So what we're looking at here, folks, is a 3-panel screen, and this is ThinkFree's fledgling algo. He's going to make an algorithm out of this. And I'm seeing some indicators here that I'll call off. I've got the SMI on all three screens. You got, let me make this easier for everybody to see. Where is this arrow? So down below this arrow is the SMI on the first screen there. Okay. Now we're going to go to the middle panel. This is the SMI on the bottom here. We're going to go to the far right panel. This is the SMI on the far right panel. Okay.
Mm-hmm. Yep.
So this is for the audience benefit. I know you know this ThinkFree. And then we have here the ADX, which is a measure of volatility, but he's only using the directional index. So the little green and red are what he's using, not the ADX. And then this green, red, and blue is an elder force index. Okay. And so what ThinkFree is doing is what we pretty much do at Algo Factory is we do a multi-time frame analysis where we combine indicator values to create an algorithm. We use the far right as the trend. And then that information will filter through, and we are able to go ahead and let me see. No, it's not. Yeah, so we can. The trend is going to tell us kind of which way price wants to go. The middle tends to be the trading time frame, but not always. And so the middle will tell us when we're entering and exiting, but again, not always. Sometimes people have two sort of higher time frame ones and enter on the far left one. Now, and that's not the way I usually do it. The way I usually do it is the far right is the trend, the middle is the trading time frame, and the far left going to be a shorter time frame. That tends for me to be a precision entry time frame and sometimes a preemptive exit or phase out time frame. Okay, so a lot of that terminology is going to seem complex to the newcomers. So if you're a newcomer, actually stick with this, because what's going to happen is if you really want to learn how to build trading algos, right? The process is we build an indicator-based manual algorithm here. So nothing that's going into the computer, right? So I'm going to bring on the screen here. Let me close this. I'm going to bring on the screen an algo I have that's running in the background. Okay. So this is my algo over on MetaTrader. It's running through TradingView. It's automatically trading for me. It's in 1, 2, 3. Currently the trades are up about $70 because I'm just using small amounts, but it's in 1, 2, 3, 4, 5, 6. It's a 12 trades or 12 to 15 trades right now, some amount like that, right? So, I could kind of spread this out. We can see exactly. Let's see if I can do this. There. So all across the bottom here are the actual trades that this is in. And right now they're all ahead. They're not all winners because nothing's ever all winners. But right now they're almost all winning, right? So I just have, let me see, 1, 2, 3, 4, 6, 7. I got 12 trades going, 12 or 13 trades. And, but it's really about 3 or 4 trades split up into 3 targets. And this was running all night. So I'm just testing an algo. I'm actually going to have to manipulate some of the things on here to make it have better numbers. But once you have an algo coded, this is what it looks like. This is what it looks like trading for you over on MetaTrader. So it's all very possible, and I've been doing it for a while now. But I just wanted you all to see what it looks like when you actually have a hard-coded algo trading for you, right? But that's a demo account. It's in test mode. So just so you understand, we eat our own cooking over here, right? I'm actually coding algos here. It's just for real. All right, so there you go. Let's put this back down, and we'll take a look at ThinkFree's manual algo. So we start with something like this on TradingView, and I like TradingView because of I like the interface. I like the different amount of indicators on here. Now, of course, MetaTrader has a ton of different indicators that are also custom. It's just that I came up on TradingView and I like the interface better. I like the graphics a lot better. And PineScript is actually something that I'm a little more familiar with, but I don't know. I mean, just started on TradingView is what everybody uses. MetaTrader's old school. It's nothing wrong with it. If you want to code your algos on TradingView, I can actually, on MetaTrader, I can show people how it's done. I can help you with that. Now, the coding itself is not something I do, but the actual building of the algo is very possible. So let's go to ThinkFree's deal. Okay, this 3-panel screen on the far right is 18 hours. Is there any reason you're using 18 hours in particular, ThinkFree?
It just seemed to move more smoothly to me than the 24, but yeah.
Because a lot of people just do something because I'm doing it. Is that why you're doing it?
Yeah, no, I just switched from 24 to 18, and it just seemed to be, I'm going on intuition. It just seemed to be better.
Okay. Because that's fine. So you have because you're doing a multiple of 4 and then a multiple of 6. Doesn't mean it's bad. I usually do multiple. So if you're going to, what I would do here for you, I'd be the 16 hour. If I was going to do 1 hour, 4 hour, 16 hour, but you know what? It might not work out as well. But I usually keep my multiples the same. So if I start with 1 hour times 4 is 4 times 4 is 16. So you might want to test that out.
Times 4.
But either way, we'll stick with the 18 for now because that's what you've been doing. And so what exactly is the beginning of your algo? What's your first step?
Well, what I'd like to do, if possible, would just review a bit of the tutorial that we went through, which isn't part of my current algo that I'm presenting, but I think there's something more I need to learn from it. What we did was we in the high time frame, we laid out a
just so people understand. Sorry, I have to interrupt you. What happened was ThinkFree was going to come on the show, and before anybody comes on the show, what I do is I make sure that their audio works, and I make sure that they have enough of an algo for us to work with. So because he was going to come on to the show and do this, we went through taking a look at what his algo was doing, and we did some minor kind of correction to make sure that it was just going to be viable for the show. So I don't just offer free tutorials, but if you're not a member of Algo Factory and you want a tutorial, I charge $200 an hour. If you're a member of Algo Factory, we'll do this kind of thing if you want to come on the show, right? I don't just do tutorials. So I want to make that very clear. So what is the beginning of your algo thing for you?
So we what we did with the SMI was as it was above, as the MSI passed, say, above 0.
On which time frame?
On the high time frame, as it passed above 0.
So I'm going to go ahead. I'm going to be interrupting you a lot, ThinkFree, because we have to make sure that people understand what's going on.
We marked out an above 0 as it crossed above 0.
ThinkFree. Hold on a minute. So just so you understand, ThinkFree, in this show, I have to make sure everybody watching understands what's going on. So I'm going to be interrupting you a fair amount.
No problem.
So what I've done here is what I've opened up the panel all the way to the right. And so we're only looking at the 18-hour screen right now. So those other screens, they still exist, but because this algo starts basically on the high time frame, I've opened this up so everybody can see, right? And the SMI is going to be on the bottom. Okay, that's what this stochastic momentum index is. That's called the SMI. And we're talking about this indicator on the bottom here. And I'm going to go ahead and put a line on this, even though there is one on the screen. I'm going to make it easier for everybody to see. Let me actually make that easier for people to see. And I'm going to make this a little bit thicker. So on the bottom here, not the actual candlesticks, but down here is what we're looking at, the SMI. And I've divided it. I put a line right at the 0 mark. Actually, let me code this at the 0. And then I think what ThinkFree is going to say is that when these two lines of the SMI go above the 0, that means that price is bullish. And when these two lines go below the 0, that means the price is bearish. And that's going to establish basically our high time frame bias, right? Is that where you're going with that, ThinkFree?
Correct. Yep. And then we marked out a date range on the high time frame.
Okay, so what we'll do with that is a date range is going to be where, look, for example, I'm just going to mark some lines out here so everybody can see what's going on. In this case, we'll start with where price goes above the 0 line, like right here, basically. We'll go 1 over. And then we're going to mark that out. And then price goes, there's a couple ways we can do this, but we'll go as price is still above that. We're going to kind of section that out right here. Okay.
Right.
Now, what we would do is we have everything set up on our 3-panel screen. We should have it set up to where
Yeah.
whatever I draw on here exists on the other screens. We're just going to verify that, and that is true. So I'm going to use what's called the date range, and that date range is on the far left on forecasting and measurement tools, where we usually use the long and short box. So I'm going to draw a date range through all of this price so that we can identify that on the lower boxes right here. Okay. So we have that date range identified. Now, do we stay on the third box thing for you? Do we move down?
Then we move to the 4-hour time frame.
Okay.
And we marked a date range in another color.
Okay, so we're gonna do. Are you saying that like where SMI goes above, just like on the?
Yeah.
Okay.
They happen to coordinate on this one.
Yeah, this one's funky because it kind of has that little dip right there. So I will do this. I'll do this first date range because we're just gonna go like this, and then I'll code this maybe like a light green. Okay, so now what we have here is that this date range that I just drew, this is on the middle of the 4-hour time frame. And the SMI is above the 0 line during this date range right here, this green date range. And then it also is in this middle of the blue date range, not the middle, but it overlaps with the blue date range from the higher time frame, right? So in this area that you have me marked, is this where our trades are going to happen?
That would be the idea. Then we switch to the 1 hour.
Okay. There we go.
Now, the thing about this that I didn't, what we were doing when I was testing this out, what I realized, I would go back on the replay mode, right?
Okay. So what TradingView has, for those who might be kind of new to TradingView, is there's this kind of rewind button on the top. You click that rewind button, and as soon as my computer VPN's like really slow this morning, so I don't know if it's my internet, whatever it is, but there it is. Now you can go back in time, and you can, and this is for the audience's benefit. As you go back in time, you can start as if you've gone way back here, and you can test as if it was live, right? So, for example, you wouldn't know right now that all of this is going to go for all this time. You wouldn't know that. You would just know that at this time that your high time frame conditions are in play, right? You would know that. Now we are back testing, so we know that the high time frame conditions will be in play as long as this band, as long as we're within this green, we know that. And as long as we're within the green and the blue, we know that. But in real life, you would just be like, hey, I can go long now, right? So that's what we've done here on the hourly. So what do you do now?
So my goal is, so that's what I discovered, that this issue of marking of the date ranges, it didn't work as a method of finding trades as we go forward into the future, because what we were doing with these date ranges is just demarcating the past. So as we go forward, it didn't help me in identifying a trade. So I'm thinking there's still something more for me to learn here. But if you wanted to go back to May 23rd, 23 on the low time frame, I could show you the algo I developed from this, which was to use the
just so you know, this marking of the date ranges works fine. So the way that this would work in real life, if this were the case, is you wouldn't know that there's a date range.
Right.
You wouldn't have any date ranges, right? In the real trading scenario, just for future reference, you have this scenario where if I were to go replay all 3 screens, you would have no, what's going on here? Usually I can replay multiple screens here, but it doesn't want to let me do it. That's really odd. Oh, I know why. Okay. So I'm going to make it look like as if you were trading right now.
Mm-hmm.
Okay, we're going to add one more bar here. And then we're going to go to our middle time frame. All right, so if you were just like trading right now, and what would happen is obviously you're not going to see any date ranges because this is real time. You can see that you've gone above on the 18 hour. You see that on the here let me just do this. How come I can't? Okay. So this is your 18 hour. You see how it's gone above?
Yeah.
Okay.
Cross.
And then this is your 4 hour. And we need another candle. You see how now that's gone above?
Yep. Yes.
Okay. And then here's your 1 hour, right? So you see the 18 hour is above the center line on the SMI.
Mm-hmm.
You see that the 4 hour is above the center line on the SMI.
Yes.
So you know you can take your trades, right?
Okay.
Right. The only reason we mark that out is because you're going through back and doing back testing. But if you're going to do replay function, then you just do what I just did. You just do an individual replay on each screen. And as your conditions, as your conditions get met, then you know you can take your trade based on those conditions.
Perfect.
Okay, so going through and marking those date ranges is just going to allow you to go back in time and study it.
Yes.
Okay, so let's go ahead and find the go into the algo that you discovered.
So
What was
that's
the date you wanted me to take a look at?
Yeah, go. I think on the 1 hour, go back to May 23rd, 23, 0200 hours.
May 23rd.
23.
Oh, 200?
Yeah.
Okay.
On the 1 hour. Yeah, you see that line? So
Yeah.
what I did prior to the yellow line, the horizontal line, was I demarcated a bunch of possible trades with my new method. And it looks like a lot of them will win. So what I did was I'm using the crossing above on the SMI as a signal to pay attention. And as long as the DI lines are congruent with bullish or bearish, I've got a winning trade, I think. And sometimes the signal with the SMI will be, so the SMI coming up, let's say in long positions, the SMI coming up will be a long, but I'll wait till the conditions on the DI are favorable.
So let me explain what's going on to everybody. So I'm going to go ahead and highlight the DI here. So this is called the directional index. And if the red is above the green, that means time to take a bearish trade. If the green is above the red, that means it's time to take a bullish trade. That's the DI. So simple, right? Now, there are some times here where it kind of, you get like a low volatility time where there's sort of kind of just making these nasty looking, lips. So I know a guy who calls them the lips, like this area. Not as clean. I mean, the green's above, technically it's longs, but it's not that clear. You want something where you have this nice separation where the red is really far above the green. That's your shorts. And it seems as if you have these arrows on top here that are kind of giving you a clue, I guess.
Yeah, they're just clues.
All right. So that's what we're talking about. When he says the DI, when you talk about the DI being bearish, that's when the red is up above the green. So this is for the audience benefit, right? So now you're saying that if the DI, okay, so let me do this real quick just to kind of help out. I'm going to mark an area where the DI is bearish right here. And in between these two lines, the directional index is the red is above the green. Are you using the elder at all?
That's just as a final thing.
Okay. So in this case,
not really, but
not really. Okay. So if you're not using the elder, let's get rid of it.
It's just a final confirmation.
Okay. I mean, I'll get rid of it just to make things look more simple
Yeah.
for the audience here. So what we're doing is that in this case, let me make sure I understood you properly. We'll go a little bit over on this show so people can get this and digest it. So what you're doing here is you're looking for bearish trades in between these two, right? And for bearish, you want the signal to actually cross. You want the SMI, you're looking for like a bearish cross where the blue crosses below the orange and it both crosses below the center line.
And the signal is as it crosses below 0.
Okay, is it the blue or the orange that crosses below 0?
Well, that I haven't completely decided, but I think I'm going with blue now.
Blue's going to be like faster. I mean, I would start with blue myself personally.
Okay.
It might be that you're going to want to test both. Your orange is probably going to be like stronger signals, but you won't get as good of a risk to reward, right?
Right.
So
once the SMI crosses 0, then I'm looking, is the DI favorable? And where I mark that trade, the one you're near now, that's a short. At the point I began that trade, I determined that the DI was favorable for a short, and then I entered a short, and that would have won.
Yeah, no, that's a nice algo. That's a great thing about all these, like when you're messing around with stuff, right? You just, like you said, you'll stumble upon things, and this is simple. I like this because it's one screen, right?
Yeah.
You don't need to go through a 3-panel. You don't need to do as much of a multi-time frame analysis probably would help you out, but you have your bias right here in the directional index. So in this case, would you have an entry? Okay, so it's favorable. You have your blue crossing below, which actually happens right at the beginning of this box, but I'm going to put a line here. Okay, and I'm going to show everybody on the screen. So the left, to the right hand side of this yellow is where the DX is going to be bearish, right? So the directional index. So you have a bearish bias. That DI has the red above the green to the right of this line. And then you have your SMI, your blue, crosses below the center. So you're going to enter a trade right about here, more or less.
Only if the DI is favorable. Yeah.
Right. Well, we know it's favorable, right?
Yeah.
So because we know it's favorable, because I drew a line on the far left as to in between these two lines, we know the DI is favorable. That's why we're doing this. So because the DI is favorable, in this case, you have your SMI cross below, right? And that's basically where you entered your trade. Hold on. So, you waited, and that's good. You waited for the candle to close. That's actually the best way to go. And then in this case, you do have a trade. It kind of took a minute. You actually had a second entry right here where the ADX, the SMI crossed above and then back down.
Right.
So you could have actually maybe like added to the trade right about here. And then you have what looks like a win. I can see you're using structure for stops.
Yeah, I didn't adjust I just demarcated the trades without determining stop and profit on these examples, but it seems like I could get a lot of wins on this method.
Well, let's test it. So we got a trade right here. That's a win, right? Because you have your 80 at your red is above the green.
Yeah.
So your short is going to be like this. Your stop, you're using structure-based stops. What I would do if I were you on this, for kind of phasing out, is when this SMI dips into this kind of oversold territory, and when you have a candle that's actually closed where the blue is above the orange, the two ways to handle that are you could either sell some of your position and put your stop to entry, like right here, or you could also just raise your stops and not sell any of the position, right? Because let's just say you held on to this trade, right?
Yep.
Let's do this. Let's say you put your stop to entry or something, like you have the opportunity in this case to have a very nice trade.
Mm-hmm.
However, you also are getting, multiple entries. So it's up to you. I would just take the profit personally.
Mm-hmm.
But I would do it as it's like, for example, here's a trade where this one did. Yeah, that one didn't work. Technically, here's a long, right? So you have, in this case, I'm going to mark an area here where you have bullish ADX. Okay,
Mm-hmm.
in between those two lines, on the bottom, the green is above the red.
Right.
And then you have a cross up on your ADX, on your SMI right here. So technically, that's a long. Why wouldn't
Mm-hmm.
you take that?
Yeah. It seemed a little vague, but because the SMI is just floating along the zero line, but I could do that. Yeah.
Well, that's the thing. See, you that's seems a little vague. That doesn't work in algo trading.
No.
So you have rules and you follow them or not.
Yeah. I think what I was thinking was the SMI definitively going up, looking
How do
for.
you, if that's fine, but how,
Okay.
here's the thing about it. You can do that manual trading, right? The
Yeah. Yeah.
definitively going up. But here's the problem with that. When you're doing any kind of trading,
Mm-hmm.
okay, you're gonna have like you're gonna have to conform to rules because there are going to be times where you're like, oh, is that definitive or not?
Mm.
And the problem with that is that when you backtest, you either have a rule or you don't.
Yeah.
So you can't just be like, because then you don't have any basis on which to create your thesis, right?
So we could say a 45-degree angle. Or
Do you have a protractor? I'm
no,
serious.
yeah, no. I mean, I could put one on, but yeah.
I mean, I think there are
So
actual.
what would be a better signal, I wonder?
Let me see here. I think you might have like a pitch fan might work for that.
Oh.
I don't know if there are actually angles here.
Oh, right.
So that's not a 45.
No.
But again, what if? Well, I don't know. I mean,
Well,
okay.
yeah. I
So
guess I need
here's
to.
the trick with that. Look at this.
Mm-hmm.
As I stretch this out, is that a 45-degree angle? No.
No.
But as I crunch this up,
Right.
is that a 45-degree angle now?
Right. Right.
You see what I'm saying?
It's vague.
So you can't rely on angles. So
Yeah.
what, right now that looks pretty definitive. When I compress the screen, it looks
Mm-hmm.
definitive as hell.
Yep.
So you can't use that. You see what I'm saying here?
Yes.
So there
So I
needs
need to devise a rule.
You said it. And so one way to devise a rule could be that, because look, here's the thing, like, just because, okay, I was thinking maybe it could swing, it has to swing a certain, like, it has to go deep before it crosses, but that's not, I don't think, going to work for you,
Mm-mm.
because
Mm-mm.
there are some great crosses that don't go deep and there's some really bad crosses that do.
Right.
So yeah, you're going to have to devise a rule, because if you, like, I have a lot of people who, well, I just kind of do my stop, like, just like it looks good. And there's no way for you to actually go through and backtest. You don't have you need a mathematical basis on which you can form your thesis.
Mm-hmm. Mm-hmm.
And that rule has to be mathematical. Now, this trade is perfectly fine.
Yeah.
Right. But what I would look at is, I would look at a way to exit, and just looking at this, the way I would do it. And you're going to kind of go in and out of trades like a little bit on this, right?
Right.
So you're going to have some trades where you could have stayed in and done better. You're going to have some trades where, this and that and the other, but you got to have rules.
Mm-hmm.
So what I would do in this case is, I would have this little trade that's our problem trade, if you will.
Right.
I would enter on the blue, but this is how I would exit. I would either have a stop loss hiked up to the entry as soon as that blue crosses below. So in this case, you have that nasty little dip right there. And the way this trade probably would have gone, again, we're back testing now, so this is not precise, but it's a good example of the kind of problems you run into, is that, let me grab out the long box here and let me stretch this out. So you are entering here long. you're going to have a stop loss. Now,
Mm.
I would consider, if I were you, a stop loss based on ATRs for something
Yeah,
like this,
that's
rather
what I
than,
want to do. Yeah.
okay. And you know how to do that?
Yeah. Well,
Okay.
you have to choose whether it's going to be one ATR or 1.5 or.
Yeah, you can, here's the thing about it. Like, I like to sometimes do a multiple from entry. So maybe maybe 2 ATRs from entry, or, whatever that number
Mhm.
is, right? ATR and a
Mhm.
half depends. Like maybe on crypto, it's going to be 2 ATRs from entry.
I need to test it.
Yeah, you have to test it. You said it. So what you would do in this case, though, is that let's just say that was your stop loss, just for argument's
Hmm.
sake, right?
Hmm.
Well, what happens here is that you're in profit initially, right? And let me put a line where the candle closes, where this candle closes after it's crossed down. Where on the SMI, I'm putting a line through the SMI on this little blip right here, yeah?
Right.
And it's going to look different live. So you're
Hmm.
going to have to deal with that too. But what you know here is that right at this line right here, in between these two, this center yellow line,
Hmm.
your SMI blue crossed below the orange and closed out. So
Right.
your way of handling that is you could raise your stop to entry at that time and possibly get stopped out. Although in this case, you're on the hourly, so this might not have stopped out.
Hmm.
Um, let me see. Look, there's not a lot of room here. 90. Yeah, you probably would have stopped out for the spread. That's fine. You
Hmm.
stopped out. So what?
Hmm.
Like, you didn't lose
Yeah.
any money, or you just lost a little bit.
Yeah.
So that's how I would do this. But
Okay.
I wouldn't, here's what I would do for keeping like these crappy trades, these ones where the
Hmm.
ADX isn't, like, where there's not a lot of volatility. I would go ahead and put the directional index back on,
Okay.
and I would have it to where if the directional index is like below a certain level, I might
Yeah.
not take a trade. Like, for
Right.
example, let's do this.
Right.
You see where the directional index dips below 20,
Yeah.
right?
Yeah.
Well, unfortunately, that's actually a good trade to take. So maybe that's not
Mm.
your answer. But yeah,
Hmm.
see, like on here, it all looks great. But you're going to have to figure something out. Or you could just take the loss. Because when you're
Hmm.
algo trading, that's just how that goes. You have a great
Right.
algo, it works. But unfortunately, there are going to be times like right here on this short. Well, you wouldn't take that short, actually. Let's
Hmm.
see. This. You know what? Yeah, this one you wouldn't have taken, so we'll ignore that. That's not.
Yeah.
No, you would have taken that one. Yeah, you would have taken this one. That would have been a win.
Yeah.
So yeah, I mean, I think you got a pretty good algo here.
Yeah.
What I like about it is it's on one screen.
Right.
That's what I really like about it.
I'm
Like,
wondering
for
about.
example, here's one that you didn't really mark out, but I would have taken
Hmm.
right here,
Okay.
because you have a positive cross and your green is above.
Yes.
This would have been a trade to take. You now, here's the issue, is that you might have simply stopped out. But here's the thing about it. Here's how you avoid hard, like deep stop outs. When the blue crosses above here, you're
Hmm.
still actually in profit or near entry. So you can just take your stop and put it to entry right there.
At what point?
See how that works?
At what point do you take it to entry?
You see where so our trigger on a long is for when the blue SMI crosses above the 0 line, right?
Right.
So right there is our trigger,
Yep.
right? You look below, you see green is above red.
Yep.
So that's our entry point, which is actually back here. Well,
Hmm.
but it's the candle after that. So it's really
Yeah.
right there, right? So the time to put stop to entry, if it were me, you see where the blue crosses below the orange right here?
Right.
That's where I would put stop to entry on this.
Right.
You see, and that way what you're doing is, because these SMI stable signals are pretty stable, you might run into trouble like, well, no, even this trade's good. This is a good, great volatile trade here.
Yeah.
No, you missed that one. Nope, you wouldn't have got that. Let's see here. Shorts, longs. Yeah, well, either way though, yeah, I would do that. Once, if you're in a trade, let's see here, this is a long for you. You might not have gotten this trade even though you marked it out,
Hmm.
because it might be, because usually you don't know this is crossed until the candle is closed, and prior to the close of that candle,
Right.
so you might not have gotten in on that one, but
Yeah.
here's one that like technically you would have gotten in on, and it doesn't look that good,
Mm.
but you got the red, and that's above the green, and then you have your cross right here. See, so let me expand each screen. All right, so you see the red is above the green. That
Mm-hmm.
condition is satisfied, right?
Mm-hmm.
And oops, gosh, why do I always do that? And then for your SMI, your condition is satisfied. You have your blue crossing below, right?
Mm-hmm. Yeah.
It actually would be here because you wouldn't know that it's crossed until that candle is closed. So I don't know that you would have gotten this candle. I think it'd be that one.
Yeah.
All right, so you have that one. Why do I always do that? And then you've got obviously you've got your chart. So your trade would be entered on the candle where the line is because I'm making room for that candle to close. So you would have entered here on your
Right.
short,
Right.
and your stop would be somewhere up there if you're doing an ATR based stop. You get a nice trade on this, right?
Mm-hmm.
So what I would do is I would have some targets set up to be like maybe 1-to-1, 1.5-to-1. Like I would take some profit at a 1-to-1 risk to reward ratio. I'd take some more
Right.
profit maybe at a 1.5-to-1. And the best way you can know is to go through and do this and say like,
Yeah.
okay, most of my trades go to like 2.2-to-1, right?
Mm-hmm.
And then you can sort of take profit maybe at like a 1.5-to-1 and maybe take some more, and maybe you can take most of your profit early or most of it later. Like you have to go through and test to optimize, and each one of these is going to be different. Like
Right.
the euro does a lot of liquidity grabs.
Yeah.
So it might be that what you're looking at with the EUR USD might be that you need to take profit a little bit earlier in order to actually like make the most money, right? But something like the beast, the GBP JPY, that one you might be able to leave it on longer because it's a lot more volatile. So each and every
Right.
pair that you trade on, you're going to have to test
Okay.
out. But here's an algo that you didn't have marked out, but the red is above. You probably just didn't take it because it wasn't a quote unquote definitive cross, but it's a beautiful trade.
Yeah.
You see, here's one here that you didn't mark out. That's a good trade. You got green above red. You have your cross,
Mm-hmm.
right? So your trade would look like this. It would have started on this candle.
Mm-hmm.
And let's just say you had like a stop here. You got a nice 2-to-1,
Yeah.
right? And that you got tricked right here, though. But here's the thing: you see how you got tricked out.
Mm-hmm.
However, you had already moved your stop to entry because right here is where the blue crossed below.
Right.
So even though this stopped out all the way, if you had profit sitting at 1-to-1, you could have taken a portion of your profits out. You might even be out of the trade. Or if you had taken some of your profit out, okay, you took some profit. And then
Mm-hmm.
as the blue crossed below the orange, then you were able to actually put your stop to entry. And that
Right.
way, when it did go below, you just got out at no loss. You took profit on, say, the 1-to-1. You took
Yeah.
half your money off when the profit went to 1-to-1 risk to reward ratio. And then you put your stop to entry once this crossed over and the candle had closed. And then that way, by the time that this candle goes down, like it would have stopped you out all the way. You would have lost half your risk. However, you
Mm-hmm.
had stop to entry because you had that crossover already happen.
Right.
So we
And it might.
definitely went over on this, but I think it's totally
Yeah.
valuable. What do you think of what we've done here? At least to this is
Well, I
first of
think.
all for the. I'm sorry, I think I know I asked you the question, but let me just explain to the audience what's happening here, and then I want to ask you that question. So forgive me
Mm-hmm.
for stepping on you.
No problem.
What we do here at Algo Factory is we teach people how to build these algos. Okay. And with these algos, I've been doing this for so long. Daniel Thinkfree is going to be able to say, hey, when I ask you for your comments in a moment, right? One of the things I'm going to ask for is like, how much of this did I think of on the fly? Right? Because there's a lot of things I brought to this. And if you're new to watching this content, you're not going to understand like what I just did.
Mm-hmm.
If you're new to watching this, you're not going to understand what I just did for this algo, right? And the reason I can do this and pull it out of my ass like this is because I have stared at these screens for literally thousands of hours. And I was able to take an algo that was a promising algo and actually make it work. And I just did it before your very eyes. So
Mm-hmm.
Thinkfree, please
Yeah.
Let me have your comments on how you think this is going to go, and also your comments on what you think I've done for this.
Well, it's super refined now. I mean, I'm still going to begin, I think, with the higher time frame, the SMI, and then switch to this lower time frame. It's a lot of. I'm not going to be able to just all of a sudden now start 200 tests to do the back testing, but I'm going to have to maybe play around with maybe 30 or 40 where I can refine readjusting the stop to entry and those kinds of things. I'm going to need to figure out how to do that in the back testing in a consistent way so I can do 200 proper tests.
And that's good. So what you're doing is you're applying a common practice that we talk about at Algo Factory, where you're gonna define some parameters and you're gonna do kind of a smaller sample. So for the audience, we do 200 back tests. That's kind of the main.
Yeah.
That's the amount of trades that we look at here. Hold on, I got a private message from one of how I look for me. Okay. Sorry. So, like I said, we 200 tests is kind of the standard for us, right? We like to see 200 back tests. That gives us a lot of data. But what we're going to do is we don't just go ahead and do 200. We'll do like a kind of a mini test just to make sure we have some decent numbers, right?
Mm-hmm.
We do like a mini test of like 30 or 40. Because if you're doing 30 or 40 and you're only winning like 10% of them, it's like obviously you don't want to do 200 of those, right? Like you don't
Yeah.
want to spend that much time. So what Thinkfree is doing is extremely smart. What I would do in this case, and this is me being the freaking back test guy, having done just so much of it, what I would do is I would go ahead, I would take the data down on the higher time frame, but I would test without it. I would test
Mm-hmm.
only
Mm-hmm.
using this screen.
Okay.
Now you
Yeah.
can keep that, this is you can keep the 18-hour filter open.
Yeah.
And what I would do is like on my spreadsheet, I would just test on this screen without the filter, but I
Mm-hmm.
would mark, like I would have a separate column on the back test. It wouldn't make a difference whether I was taking the trade or not,
Mm-hmm.
but I would simply mention whether or not the SMI was above the zero line or below
Right.
the zero line.
Let's track it.
Just track it. Yeah, I wouldn't have it as a factor. I wouldn't have it as
Right.
an input. I would track it and then see, what might happen there is that without that or with it, it's a good algo, but you can use that data to optimize, right?
Mm-hmm.
If the higher time frame bias is bullish and you take a bullish trade, perhaps your targets are better at a 2-to-1 risk to reward ratio rather than taking targets earlier. You set your targets later. That kind of thing is
Mm-hmm.
probably what will happen.
Mm-hmm.
But I would simply track first, because what I think is going to happen is I think this is going to be a profitable algo,
Mm-hmm.
just as what we see here on the screen.
Yeah.
And these little trades that don't work out, maybe it gets you out too early, maybe it doesn't. Don't worry about it.
Yeah.
If you're profitable, even if you're only making, a couple of percent a month,
Mm-hmm.
just do it. Just go
Yep.
through the all 200.
Yep.
Just
And
do it.
and I'm wondering about if I should pick the 1 hour or maybe go to the half hour. Who knows?
Uh,
I think
Pick one and stick with it.
pick one and
That's the
stick
answer.
with it.
Because
Okay.
look, you're on the hourly, so let's kind of talk about what that looks like, right? Um, First of all, let's see this. What you might want to add to your trade ideas here.
Mm-hmm.
See how sorry about that. You see how you have your green. Okay.
Yeah.
Let's do this. I'm going to take a look at this cross, even though it's not crossing the zero line. I'm going to
Mm-hmm.
take a look at this trade because this is something I just happen to know about SMI and a few things.
Yep.
You have your green above your red. You have your SMI, and you see how the blue crosses the orange above the zero line
Yeah.
right here.
Yeah.
This is take note because that's your next algo.
Oh, okay. Yeah. Yeah.
Okay, that's your next algo. You're not going to see as many of these,
Right.
but let me see if I can find another one. Here's one. Perfectly good trade. So let me mark this right here. So you see how you didn't take this trade, right?
No.
So we're gonna bonus you with the new algo here. It's just not as common of a trade.
Yeah.
But you see the green above. You
Yeah.
see you're above zero line, and you don't cross below.
Right.
But you get your blue crossing above the orange right here, and you see how that's a long and a nice one. You see that?
Got it.
So that's your, or here's a short one. So you have your red above green, and you have you don't cross that zero line, but your blue crosses the orange. You see how that's a beautiful short right there?
Blue crosses above the orange.
Yeah, like right here. I'll show you. This is your SMI. And now the whole time from like here to here, the red is above the green.
Mm-hmm.
Okay. Now your SMI never crosses zero.
Right.
But your blue crosses your orange right here.
Right.
So that's a beautiful short, even though you don't get your zero line cross. That's your next algo. So once you have this algo mastered, this is your next algo.
Excellent.
So just a little bit of a freebie
so I think,
Cowboy here.
So my experience with this is, I started.
Look at this one. I'm sorry to interrupt you. Look at this one here. You got, in this case, you got 1, 2, 3 of those.
Oh, right.
You see what I'm saying?
Right. Yeah.
Okay. What were you going to say? I'm sorry.
Well, I've been, paying my dues since last summer. I've been working on this thing, I've had numerous setbacks where I wasn't able to pay attention to learning all this stuff. And it's only now in the last month or two that things are picking up a bit of steam. And this is like a breakthrough for me to be able to finally consolidate an algo and start the testing. So I'm getting quite excited about this. It's sort of perseverance furthers, right?
Yeah, this is a game of perseverance, 100%. This is like, you don't have to be that smart. You don't have to be. I'm not. You seem like a very intelligent individual. I'm not saying anything about you, but you don't have to be that smart to do this.
No,
like it's just patterns.
Yeah.
What it takes is what you just said. You got to stick with it. If you're not, most people, like, they think they're going to get rich by clicking buttons, right? And then they get into this and realize that it's work.
Yeah.
So that's that's where people go, that's where they fail. What they'll do is they'll think they have the holy grail of trading, because it happens to every algo trader. They think they've got the holy grail. They're like, oh man, like it's late one night, it's like 2 a.m. All of a sudden you find this thing and every single test works. It's like, oh my God, I'm going to be rich. And then like you wake up the next day and you're like, oh, wait a minute, this was working last night and it's not working anymore.
Right.
And it happens to like every trader. It's like the most, like, I thought I was going to be rich. Like, no, this is not the case. But what is the case is that when you find a decent algo and you test it and you go through the testing, even if it doesn't yield that great a result, you'll learn the process of testing.
Yeah.
And it's kind of like playing with a Rubik's Cube. It just kind of talks to you after a while.
Yeah.
So you will, and now that you've done this for the period of time that you've done it, and I've got the little bit of, Cowboy secret sauce in here, but we do have something that is feasible. Like, look, here's another one of the new algo that you'll be doing once you have to, because the algo you have is great. I would stick to that. I'm just giving you something to look at for later.
Yeah.
But you see this here.
Yeah.
Now this might work a little bit better on a higher time frame. But because you'll have more pips, right? But look at that. That's beautiful, man.
Yeah.
Look at this one. Oh no, that one crossed the zero line. But look at these. This is one right here. This one right there.
Yeah.
I mean, you got some good stuff right here.
Lots of possibilities. Yeah.
All those possibilities. That's your next algo. So I just gave you, just because you're on here and you've come on and you're, are you going to do a testimonial too?
I'd love to. Where do I put it?
You can just send it to the direct message.
Okay.
Our guys are all kind of starting to do testimonials and sending them in. So we're going to be
wonderful
showcasing those. Now, look, we've had some, like I shared some of my crypto trades in here, And I
Yeah.
mean like my buy and holds, and one of them went like times 10. A lot of them have
Yeah.
gone times 3 or 4 or 5. So, people are
Wow.
starting to get pretty happy about the results, even though
Yeah.
we're not like a signal room, even though it's not,
Yeah.
the idea is not like to follow my trades. That's
No,
not what
it's to
this is.
learn.
But people seem to be using my data for the research and making a lot of money. So people are really starting to do testimonials on our process here. So that's, the
Excellent.
more of those I get, the easier it is for me to continue.
Excellent.
But yeah, this is, I think I like your setup here, because what I really, really like about this,
Mhm.
and you and I worked prior to when we were going to do our last show. We just, obviously
Right.
we needed to
I was
remember my
floundering.
thing. I like
I
simple.
was I was floundering then. I had 3 indicators, maybe 4, but then I discovered, oh gee, I'm gonna on the back testing, I'm gonna be making a trade every 3 to 6 months if
Yeah,
this
I remember that. Yeah.
and that's not gonna work.
No, no.
But yeah.
Yeah, I'm just looking now. Like,
Yeah.
you would have had a trade, a beautiful trade right here.
Yeah.
You might have ended this one a little bit late. Let's
Mhm.
see. No, you got it. It's good
Mhm.
right here. You would have caught this move up. This
Yeah.
was last Wednesday. You would
Yeah.
have caught this move down. Maybe,
Yeah.
maybe, maybe you would have. Maybe you would not have.
Yeah.
This move down, you would have. This is kind of a weak trade, but you're always going to have those.
Yeah.
You would have caught this one
Mhm.
right here. This would have been a good trade for you.
And an algo like this should also work if you would eventually want to organize your life to do 3 or 4 hours of trading a day.
Oh, absolutely, yeah.
Yeah.
Here's the thing about algos, like,
Yeah.
3 or 4 times a day, you're talking about going down to like the 15-minute chart. So, this is what that would look like.
3 to 4 hours. If I work 3 to 4 hours a day on trading, that would be my goal. This algo could work for that.
Oh, I see what you're asking. Yeah, that's the idea. So if you were, let's see, that's on the hourly. Okay, so this is at 4 a.m. This is at 10 a.m. Yeah, you're coming across trades that are about once or twice a day, it seems.
Mhm.
Tuesday,
Mhm.
Wednesday, Thursday. You're getting about a trade a day on this. With your work, do you work from home? Can you trade while
Yeah.
you're working? How does that work for you?
Well, I'm eventually hoping not to more or less retire. Like I'm like 70 years old, and I work 3 days a week,
Okay.
and but eventually that will end more or less, and then I'll be. I was thinking, trading 3 or 4 hours a day might be the ticket.
Okay. So, yeah, and you got to. So funny. I know that like the 20-year-olds listening to this are like, oh my god, he's 70. Just fella, 70 is not old. My dad's
No,
70.
no.
My dad's 70. He surfs every day. Like you got
Yeah,
these. But I'm actually not that far from you, to be honest. So I'm a lot younger than I sound. I mean, I sound a lot younger than I am.
yeah.
But so the trick is on this, these trades are showing up. Like, are you really going to be trading at 11 p.m.? Probably not. So there's
I
going to be
was,
trades that you're missing.
I was looking at
When
the traffic, and I was thinking probably around 6 to 10 a.m. Is a good time on the world market.
Absolutely, yes.
Yeah.
EST.
Yeah, or well, I was thinking of PST, but between 6 and 10 a.m.
Well,
But
that's
we'll see.
perfect because the market open for you is 6:30. It's right now. Market just
Yeah,
opened. So
yeah,
your optimal time would be to start say at 5:30 a.m. And pick out your trades.
yeah, yeah.
And that's the best time to trade it. I don't know if your schedule allows for that right
It-
now.
it- yeah, not right now, but it will.
Yeah, you're just talking. Basically, what you're doing is you're trading the New York Open.
Yeah.
Now, what you could do while you're still working, when you do not have that freedom,
Hmm.
is you could move this up to the 4 hour.
Okay.
Okay. And you'll get a couple of trades a week,
Right.
maybe, or like a trade a
Right.
week. But what you're going to notice on the 4 hour is that these trades start forming up like days ahead. So
Oh.
you're going to wake up in the morning at, if you start work, let's just say you're in PST. So let's just say you start work at 7:30 a.m. Right
Mhm.
at the market open, right?
Yep.
Well, you could get up at 5 and
Mhm.
look at the market from like say 5 to 6, and you'll see that
Mhm.
a trade is like, oh, I think a trade's going to happen,
Mhm.
but it's not going to actually form up and hit until later that night.
Mhm.
So you'll be able to
Right.
realistically enter a trade that you saw forming up this morning, but not enter it
Mhm.
until later.
Right. Right.
So that's
Okay.
that's the beauty of trading on the 4 hour. It's called swing trading.
Mhm. Mhm.
And a lot of people who have like a 9 to 5, what they'll do is they will do what I just said. Like they'll
Mhm.
they'll
They'll
look
check.
at trades, like they'll get up in the morning, they'll say, or they'll be done with work and they'll say, oh, look, it looks like a trade's going to form. And then the
Mhm.
next morning when they wake up, it's just about to form, right? It takes that
Mhm.
long for those
Right.
trades to happen.
Okay.
So while you're still working, and this goes for anybody out there, if I were working a 9 to 5 or even a whatever, a 9 to 9 to whatever because I used to work, 12 hours a day back when I was in corporate America.
Mhm.
I'd be trading on the 4 hour because you have time to let those trades form up. And
Right.
if you're trading on, say like Oanda, if you're doing Forex or if you're like Bing X, if you're doing crypto, whatever it is, you can actually trade from your phone. I don't recommend doing everything from your phone, but what you can do is you can do all the research at home when you're in front of your big screen, right?
Mhm.
And then you could have your trade set up with your alerts. Those
Right.
alerts can notify you on the phone, and you
Yep.
can have the trade all set up and ready to go, and you can simply enter it while you're, at your lunch hour or whatever it is. Just understand that at some point you're going to want to hard code this, and we can put you on the path to do that. So it just does that
Yep.
for you, and you don't have to sit and watch it.
Right on.
But that's
Yeah.
all very doable. The best thing though, I think, is that for people to go ahead and get started, use the single screen version of this. Hold on a sec.
Yep. I'm gonna do it. Also, might end. You could also arrange your schedule to work. Trade 4 days a week and work 3 days a week.
If you have that kind of job, there
Yeah.
are those who don't.
Yeah. Yeah.
There are people
Yeah.
who they can only work when the boss tells them to.
Yeah. Yeah.
But either way, you can, even if you don't have that freedom on the
Mhm.
4 hour chart, you'll still have
And
that ability. Like
still.
your trade will form up at
Yeah.
2 p.m.,
Yeah.
but you can still enter the trade at 4 p.m. or 5.
Yeah.
Like
Yeah.
that's the 4 hours beautiful like that.
Cool.
So look at
Okay.
this one here. This is the new algo, our bonus
Yeah.
algo. Look at this. Look at this. You got this beautiful one right there.
Yeah. I
Yep.
see. Yes.
That's a nice
Yeah.
one.
Yeah. The ADX and the DI are. Yeah.
Yep. And you're going to find, I think, that most of these are when the ADX is positive sloping, but that's going to be
Yep.
neither here nor there. It's just
Okay.
that's not going to matter. But either way, that's that. You got two algos. So now these
Yeah.
are not saved on your chart, so you'll
No.
have to
No.
make sure you're taking notes.
No. No. I'm taking notes.
Okay, perfect.
I'm gonna.
Okay, well,
Yeah.
um,
This is really fantastic. I really appreciate your support. It's just it makes a world of difference to have somebody knowledgeable being able to guide my specific situation. That's yeah. So thank you.
well, you're welcome. Yeah, it's what we do.
Yeah.
That's why people come to Algo Factory, and for somebody who's willing to come on the show, and to kind of take their time to work with us
Mhm.
and help us kind of promote.
Yeah.
Of course, I'm happy to help. It's like
That-
we're making a trade in a way.
yeah. It's good for me. It's good for you. That's wonderful.
So yeah, and again, anybody who's part of Algo Factory. Sorry, I've got a little dry throat here. Yeah, for this kind of thing, you all fit in this category.
Hmm.
If you're at this part of your development, you want to come on the show, like this is open to you, right?
Hmm.
We've talked about this. I'm
Yeah.
going to mute for a second. I don't know. Oh boy, it might be the springtime. Oh, what's going on there? Having a hard time.
Clear those lungs.
Yeah, I think I got I don't know, maybe my coffee or something. Who knows?
Yeah.
I burned my coffee. I did it too hot today, so I'm gonna blame that. It's gonna be my make believe reason why I'm coughing.
Yeah.
But yeah, this is beautiful. I like, again, what I really like about this algo is that it's on one page, like it's on one screen.
Yeah. Yeah. Amazing.
So the algos I have coming out, all right, they're gonna come out, I don't know, this week, next week. One of the things is they repaint. And the reason they repaint is because they're based on multi-time frame analysis, right? So you have it where some of the data comes from a higher time frame, and when that's the case, the indicator will recalculate. Let me bring it up on screen. Now I'm finding that whether or not it recalculates, it's still good to go. That's what's interesting. It doesn't matter if it recalculates; it's still a good trade. Here it is. Let me expand this. So this is my algo, and it's actually kind of a suite of these. And I'll be offering, I haven't decided how many, but I think it'll be 4 or 5. And they all look kind of similar. But what the deal is with these is that, let me see, which one is this? Is this the Bing algo? Is this for Bing X? Let me see here. I had one oh no, this is version 5. Okay. So just to backtest on this, understand that like the indicators that stay after the candle has closed, those are the strongest, right? But you'll notice that in real time, these suckers will pop up and then they'll disappear. But those are all takeable too. Even if one of these pops up and disappears, they're all tradable. So watch as I actually go on a back test here. Okay. I'm gonna hit the play button here. Thank goodness I got over all that crazy coughing, man. I was like, what the hell's wrong with me, dude? All right, so well, this one's much smoother. The last one I did had a bunch of signals that didn't exist. See you're getting a few. Okay. All right, I'm going to pause it. Oh, shoot. I didn't pause it soon enough. You saw there are like a number of them in here that don't exist now.
Right.
So you only saw 4, but as I replayed it, oh, we got a breakout on the Swissy. Let's see if we got a trade. We're gonna stop this broadcast to take a trade possibly. Let's see. I was up late. Okay, not quite. I was up late last night because I was going to trade. I'll be trading the European session again. Every so often, I just start working late. It does look like we are going to see a breakout to the downside here, but it's not quite there yet. Let me fix this. Edit. Once per bar close. Save. Okay. All right. Back to the crazy testing. Okay, so let's do this again, but I'll stop it. See where the real time is. What is today, the 25th? Okay, so we'll stop it before that. Okay. So we'll hit play. I have to be on PST here in a few days, actually. I got to go at a family event that I need to be there for.
Excellent.
Well, yeah, actually not excellent, but that's okay. No, lost a family member, but it's all right. Not unexpected. So let me do this, and this, and that, and I'll take this off. Okay, so as I leave this, you'll notice that like there at least one of these, in fact, 2 of them, these were trades that didn't exist now, right? But you see that they existed back then. And in real life, those are the ones that would have appeared and disappeared. Right? And those were based on the higher time frame data at the time, but watch what happens when I backtest again. They'll be there, but they'll be different. But the thing is, and what I'm noticing is they're actually all good signals. So that one's still there. Let's see if this one does it consistent. That one's still there, but then there's two new ones. You see? And then that other one was not there. So what it's doing is it's reading the current data on the higher time frame. Oops. Forgot to stop it again. Hit play. Okay. Then I'll stop it before it gets too far. But they're good signals. See how that one kind of appeared and disappeared? And then there's others. But all the signals actually work. Even the signals that like don't, the ones that don't stick around. See how there's these two that aren't even on the original? These are both longs that work out. So that's the thing about my new indicators. It's extremely powerful, but because it's multi-time frame, you get these kind of like ghost indicators, you get flickering indicators, but they're good even if you take them live time. But yours, on the other hand, doesn't have that problem. I mean, you're always going to get some wagging, whether you're trading like manually or whether you're trading. Where's your indicator here?
Are you making this indicator you showed available, or?
Yeah, it's going to be available like ideally this week.
Okay.
But there won't be no. I'm not going to have the code available.
No.
So no one's going to be able to actually like have the code, but I'll make the indicator available for people to use and trade. But it's super powerful. And it's Algo Factory members get 50% off. So instead of $50 a month, it'll be $25.
Excellent.
Which is great. But for you, let me see here, it's all on one screen.
Yeah.
Now there will be some lagging a little bit, but as long as the candle has closed, it should still be a valid, like it should stay once the candle has closed, because there's no higher time frame data that's going to change. So that's the beauty of yours. It's just it's one deal. See here, this will be I'm just looking to see, like, this is a valid trade for you right here, your current algo, and this is a long. You have to figure out your stops. Now you probably would break even on this because you're going to have a cross right here. The other way about it is you'll break even on that. But where else? Like, here's a good trade for you and you'd make money. Right here. This is on the 4 hour, right? So you would see this coming. Okay, so this is on a Sunday, right? And then it bleeds over into a Monday. So Monday morning at 6 a.m., you would see this trade. And then the candle would close at 2 p.m. So you would be able to actually get into this trade right after work, right about here. You wouldn't get the exact perfect entry, but you would still be able, even if you're using like a structural stop, you're still getting like a 1.5 to 1. Yeah. Or if, some people will kind of look for a pullback, but I wouldn't do that. But some people do. A lot of ways to do it. Let's see if I can find. Okay, here's one for you. Another one. So just to kind of give you what that like daytime.
You're going on the orange signal line.
Actually, I'm on the blue, but I'm going a candle after it.
Right.
Because you have to let the candle close.
Right, of course. Yeah.
So it looks like I'm going on the orange, but the reality is I let the candle close so that the blue is underneath by the time I'm taking the trade. I'm being conservative. So this is one mistake people make when they're trading is they get like they're not conservative. They do it right on the candle, and what they don't realize is that when you're trading, you don't have that data where you can just enter it on that candle. You have to let the candle close.
Right.
Because here's the difference. Let me zoom this in. Now, if you were back testing and you didn't understand the game, you might think that you have this trade where you get like a 3.5 to 1. But the reality is that you're letting that candle close. So you're not getting in until here. So you're getting a trade that's only half as good as you thought it was. But a lot of people will be too optimistic because they don't understand they have to let that candle close. And then they'll have these results that make that they think they're going to get rich. But that's not realistic. You need to let that candle close. You need to go a candle after the condition has been met.
Right.
And then you can have a realistic trade. Right. And then as time goes on and you get really good at what you're doing, you can kind of even be better at that like refining of your positions and stuff like that. But always be conservative on your back test. Back test almost always give you numbers that are going to be better than reality. Almost always.
Mm-hmm.
A couple of things with that. Number one, there's hindsight. So you're looking back through time and you know the future. Another one has to do with what we just talked about. Like you want to make money. It's confirmation bias. You're going to be optimistic. You're going to think that you made the perfect exit. You're not going to account for the spread. I mean, there's so many things that, like, so you want to be conservative in your back testing so that when the real numbers come out, you are just closer to reality.
Yep.
That's how that works. So, good. Well, this actually was an extravaganza. We went a whole hour and a half on this, but I think we got a lot of good data out of it. So anything else before we end the show today?
A lot of good data and a lot of good inspiration to carry on and get my testing done.
Oh yeah,
and
absolutely.
That'll be fun to report on that once I get it all done and execute this thing.
Yeah, and this goes out to Algo Factory members or people who want to be a member of Algo Factory. If you're in it and you're putting together an algo and you're really doing the work, then I will do some refinement. That's now if you're not a member of Algo Factory and you're doing this, then you got to pay me $200 an hour.
Yeah.
But as a member who wants to come on into the show and do all this is part of what we offer.
Mm-hmm.
You're not going to find any service out there that offers more than what we offer, especially for our price.
No, it's a fantastic deal in my mind. And you guys, both you and V are like-minded individuals. You guys are very open-minded. You guys have got a good lay of the land on what the hell is going on around us. And that really makes it all the more fun.
Well, I appreciate you saying that. And, let me just say it this way. We've been using our data for a number of years and we continue to forecast correctly. So we must be doing something right.
Yeah. Yep. Yeah.
We're right much more often than we're wrong.
Yeah. Yeah. Yeah.
Awesome. Well, we're going to cut it out about maybe 5 minutes early. So thank you all for coming on. We got actually a decent little crowd that continued to watch for this whole show over on X especially, but we got a lot of people watching. So thank you all. Do like, subscribe, do all that stuff. This was a pretty big show today. And again, this was supposed to be the private live lab, but I just kept it going on YouTube just, hey, so people can see what we do.
Mm-hmm.
And that'll be that. So thanks a lot, everybody, for watching. And thank you, Free, for jumping on with this.
Yeah, thank you. I'm really inspired to carry on. Thank you.
No problem. Stick with me for a second here. I'm going to end the stream.
Yep.